Hi, I'm Kelly Anne.
And I'm Valerie Rupp.
We're here with Elite Real Estate Group, and we wanted to give you our little coffee talk, the local market, and how it's doing. We just got our latest May Reno County stats. 81 homes sold. The average days on market was 47. Now that was from listing to close, and that was down 13% from last May. There's 52 active listings. That's down 10% from last year. And the average sales price was $149,000, and that was up almost $10,000 from last May. So breaking news, the U.S. central banks have announced its biggest interest rate rise in nearly 30 years as it ramps up its fight to rein in soaring consumer prices. What does raising interest rates, what does that do to our local market?
It slows it down a little bit, and we're kind of seeing that, but it's not always a bad thing either, because it was such a crazy market that people got scared, especially first-time home buyers. They're trying to jump in and were excited about getting a new home, but then they realize they're competing with 5 other offers, and it's not as fun as they thought it would be. So until everybody gets acclimated a second, kind of just readjust and realize this is the new interest rate a second, which still isn't terrible. Even like 5 or 6 years ago, it was still around that, but we're just readjusted our thoughts thinking at 2 or 3% is what we had to have. So again, if you talk to some from the 70s and 80s, it was 12 or 18% interest plus 20% down. So it's totally different from that. You can get in at 3 or 5% still, but we have other ways to see about getting a better interest rate for you, even if it is jumping up to, a 5 or a 5.4.
Lots of different products, but I think buyers shouldn't feel like the interest rates were done to punish them.
No.
It's actually the opposite. By the Feds raising interest rates, it allowed the market to calm down. People aren't overpaying for houses. They're willing to take the time and do their due diligence. So it's just really the market trying to even
just
itself
readjust,
out.
yeah. So until everybody gets acclimated again to it, you're just going out and taking a look. What we're finding is this is a good time for investors.
Yes.
Where before they were getting shut out of the market on trying to find a house to flip or to buy as an investment property to hold. It's just a time where they can go evaluate a little bit more, not have to make up their mind in 2 days of whether or not something's going to work, and then it's $20,000 or $30,000 over asking. So if you're thinking about investment properties, this would be a good time. We're kind of back to that. Hutch market before COVID was 90 to 120 days, so now it's readjusting a little bit more. It might be on the market a couple more weeks than usual, but that just allows people to kick the tires, do some due diligence, like she said, and not be so intimidated by the market.
I definitely think if you're a first-time investor and you've been thinking about getting in but intimidated by the crazy market, it's definitely, there's some opportunity out there. We'd love to talk to you. We have some creative ways to kind of help you get into some
different types of financing too. We're here to help. Don't be afraid to ask questions, and we look forward to working with all of the first-time home buyers and also investors too. So
thanks for catching up with us, and we'll be back next month with the latest stats.
Thanks.